Hello friends, I hope you are all doing good. I welcome you to the class of critical issues for the current affairs. In this class, basically what we try to do is that we discuss those very important issues which are directly found in our UPSC GS syllabus, but at the same time the content for these topics is relatively difficult to find. So what I do is that from the six newspapers that I normally follow and teach in the Unacademy platform to my students the current affairs from those six newspapers, I've identified these very crucial issues that are found in the syllabus. But again, as I stated, that the content is relatively not easily available for these topics, and therefore we will try to cover these topics here in the class itself. So let us begin with the first issue. Now, before we go there, I want to tell you two things. First, that for all these issues, there is a workbook which is made, and this workbook is available on my Telegram channel, whose link is given there in the slide below. Plus, at the same time, please make sure that while we are discussing these issues, you make your notes of each and every point in the workbook in the space which has been provided to you there. So please do the needful, and thereby you will be able to comprehensively cover the topics in your workbook itself. The first issue that we will try to do is a very important issue which is relevant to the GS Mains paper 2. Will the states toe the center's line on capex? Capex basically here stands for capital expenditure. So we will try and have a look at what is the center's approach, why do the states have to follow this approach, and the relevant issues regarding that. Friends, the syllabus to which this topic relates to is called the devolution of powers and finances up to the local levels and challenges therein. This is a topic mentioned in our GS Mains paper 2. No polity book available in the market till date has any content available exclusively for the topic given heading here in the syllabus. The source from where I am discussing this particular topic are the two articles. One is the Hindu Business Line editorial that came, and one was a lead article on the editorial page in the Hindu Business Line newspaper. So these are the sources from where I have taken this. Now let me discuss this issue with you. First and foremost is that let us understand what the issue is altogether. Friends, very recently there was a very rare meeting that happened between the Union Finance Minister and the Finance Minister of the states. Normally these meetings do keep occurring throughout the year, and they do keep occurring over a period of time. But what was very significant about this meeting was that when this meeting occurred, there were certain objectives behind the meeting. The first important objective of discussion was that how can the center and the states work together to ensure that there is proper recovery of the growth in the country which has been affected because of the pandemic. As we all know, that the pandemic brought about certain lockdowns, and because of those lockdowns, there were also supply chain disruptions. Because of these supply chain disruptions and the lockdowns, the economy went for a toss. However, COVID alone was not the only factor that had caused a decrease in the growth of the economy. The growth also had gone down primarily because of certain initiatives that had been taken earlier, though the initiatives were positive and will give an impact in the long run. But those initiatives were such that they did affect the growth temporarily for a short period of time. The one initiative was the demonetization. The second initiative was the introduction of the goods and services tax. While both these initiatives, as I repeat again, are important for the economy, and these initiatives will give us the desired result in the long run, but the timing of these initiatives were such that as these initiatives had already slowed down the economy a little bit, when the pandemic came, the pandemic accelerated the slowdown further and kind of acted as a catalyst in further pushing the economy into a downward spiral. In this backdrop, the finance minister of the country and the state finance ministers have been having regular meetings time and again. The objective behind these meetings is, as I stated here and mentioned, that they are discussing means by which they can work together to strengthen the spirit of the cooperative federalism and ensure that there is COVID recovery from the issues that have been caused because of the COVID as such. Second important thing is that because of the COVID, there has been another unfortunate implication on the economy. Now, because the COVID led to lockdowns and because the lockdowns caused disruptions in the supply chains, the capital expenditure done by the states and also to some extent by the center has gone a little shaken off. You see, the center and the states have been indulging in capital expenditure. The reason why capital expenditure matters and is very important is because it helps us to create assets, and these assets help us to eventually generate not only growth but also income for the economy. There are two types of expenditures, as you know, that the government normally carries out. One is a recurring expenditure. That recurring expenditure is the revenue expenditure, which is an expenditure which the government has to carry out irrespective of the social implications. For instance, whether there is a pandemic or not, the government still has to pay salaries, the government still has to pay the subsidy bill. But the pandemic did not affect the revenue expenditure. The pandemic actually affected the capital expenditure. Why did the pandemic affect the capital expenditure? As I stated, friends, because when the pandemic came, there were supply chain disruptions. Because of these supply chain disruptions and the lockdowns, what happened eventually was that we were in a situation where the states reduced the capital expenditure. What kind of capital expenditure? For example, expenditure on construction of roads, expenditure on construction of highways, other infrastructure activity, or any activity which can act as a force multiplier. Force multiplier here basically means a very simple thing. Force multiplier basically means that you invest 1 rupee, and that investment of 1 rupee will give you a return of, let's say, 2 to 3 rupees. So when your investment into an asset gives you a higher return, we call that investment as a force multiplier. Now, what was the objective behind the meeting here? The rare meeting also discussed for the first time in the pandemic era the issue of capital expenditure. And as I said, that because over a period of time, specifically since the pandemic has affected all of us, the capital expenditure has been reduced. So there was a meeting done where the Union Finance Minister worked with the state finance ministers or the revenue ministers at times to discuss the strategies through which a capital expenditure push can be given. Because now, during the period of pandemic, if the capital expenditure is increased, then with the increase in the capital expenditure, what will happen is that more jobs are likely to be created and more income is likely to be created. So government is looking at a larger ecosystem and not just merely looking at job as one of the aspect affected by the pandemic today. So why capital expenditure? There are two things which are very clear to us. That, as I stated, friends, that firstly the capital expenditure has a maximum multiplier effect. That means that it is an investment, and this investment gives us a relatively higher rate of return in contrast to the investment that we may do, let's say, for revenue expenditure. And also, it's a growth accelerator. Because when you invest your money in capital assets, and when you invest your money for the purpose of creation of assets or infrastructure, they will not only create growth, they will also at the same time create jobs, and growth and jobs together will improve the income levels in the economy. And as the income levels in the economy improve, not only the people will be pulled out of the poverty trap, but also at the same time, with higher levels of income, the people will be able to live better lives and have access to better services. Don't forget one thing, that if the income levels in the society rise, the taxation will also improvise. And with more taxation, the government can provide better services. And if the government can provide better services, whether they be at the level of infrastructure or at the level of healthcare, it will all have a positive impact on the economy as a whole. So it is in this backdrop, the capital expenditure has to be seen as a positive strategy, as a strategy that is created or conceptualized with the larger objective of helping the economy and the society. So don't look at the word capital expenditure only from the economic perspective, while it may be a term purely used in the economic sense. But as we stated here and as we have seen, that capital expenditure also has social implications. So keeping this in mind, let us proceed further. How does the capex or the capital expenditure help? So there are two evidences available. These are evidences that you can use in the exam. While writing an answer, you can quote them. The first evidence is that there is a National Institute of Public Finance body which has come out with a report. That report says that every 1 rupee that we spend in revenue expenditure has a 0.98 rupee multiplier effect. So one thing very clearly you can see here, friends, is that if you spend 1 rupee for the purpose of revenue expenditure, the return that you're going to generate is of 0.98 rupees. But the same report also argues that when 1 rupee is spent on capital expenditure, on the purpose of asset creation, infrastructure creation, then the multiplier effect or the return that we get is 2.25 rupees. So this is a fact which you can use in your answer to support the argument that why capital expenditure is important and why capital expenditure matters. Second evidence, friends, is that, as I told you in the previous part also, that when you do capital expenditure, it has social implications. It not only acts as a catalyst for growth and jobs, but let us now understand the next important dimension, that when you do capital expenditure, it also acts as a catalyst for private expenditure. Friends, when the governments of a country undertake expenditure on creation of infrastructure, not only the citizens of your country are going to utilize that infrastructure, but that infrastructure will also become a base for the industry. And that infrastructure, which will eventually become a base for the industry, will be viewed or seen by the industry in a positive way. If there are good quality highways in your country, if there is a good quality healthcare architecture in your country, if there are industries that do not create pollution in your country, and thereby relatively the air quality, etc., and other parameters are good, you will be able to attract more investment from abroad, because this particular land will be perceived by foreign investors as a land of opportunity. And the reason why they will perceive it as a land of opportunity is because they will see that in India, you have good quality highways, you have good healthcare architecture, you have healthy people, you have a society where the manpower is productive. You not only have all this, but at the same time, you have an environment which is not pollution centric but pollution free. And in this environment, the industries use cleaner fuels and therefore are able to contribute to sustainable growth. In this sense, if you look at the capital expenditure, the reason why it becomes also equally important is that it creates a base. It actually creates an inducement for the private sector, and it also acts as an inducement for the global investment. Today, because of the pandemic, the global investment and the global money is not moving very aggressively. One reason why it is not moving aggressively is because the foreign investors which are there in the Western countries do not really know how the pandemic situation is going to unfold and how is it going to affect the developing world. A country like India, which is an emerging market economy today, is definitely one of the countries which has a huge potential, not only because of its demographic dividend, but also because of India being a land of opportunities. But do not forget one thing: if we are unable to undertake capital expenditure, if we are unable to create a base for the industries, we will not be able to offer them an inducement to come and invest their money. Our larger objective is to seek foreign investment. So I hope you are trying to understand two important things from my discussion that I have done till now. That while capital expenditure is very crucial for domestic economy, the capital expenditure also has social implications, and the capital expenditure also acts as an inducement for the private sector, and specifically foreign investment for a country like India. So this evidence helps us to understand that how capex is crucial for the economy. Keeping this in mind, now if we look at the next part, that is the what is the center state scenario on the capex here. You see, the data very clearly tells us one thing, friends, that it is surprising that the states actually spend more money on the capital expenditure in our country than the center. Question is, why does this happen? First thing is that because please understand that the reason why the states happen to spend more is because the state governments are more closely connected with the people directly. Because the state governments are more closely connected with the people, they also try to fulfill the aspirations of the people in the elections. Whenever there are elections, every political party comes out with a party manifesto. In the party manifesto, they make certain promises. To fulfill those promises, when the governments are formed after the elections, a lot of expenditure is done by the government machinery. Most of that expenditure is in the form of capital expenditure. Because whenever the elections happen, you may contest the elections by arguing that we will offer you this when we come to power. Please understand one thing. Sometimes there is a debate that, in India, the politicians and the politics are moving towards a culture of freebies. Freebies means that we are trying to offer inducements to the people, that we will give you free water, free electricity, etc. The argument behind this is, the critical argument rather, I would say, is that, there are people who argue, and specifically some economists who argue, that by giving freebies to the people, you make the people dependent. You make the people lethargic. You make the people lazy. But friends, don't forget one thing. That argument is wrong. It is wrong fundamentally for two reasons. First reason is, today, the political class in India enjoys a lot of freebies. They have free residence, they have free water, free electricity, free telephone, free water supply, free transport. Everything is free for them. Now, if a representative of a public is given all these amenities free, don't you think it is appropriate that the same public representative also has a right to create a policy to give the same free things back to the society that has elected the representative? Think about it from the political perspective. Think about it from the democratic argument in the society. And number two, very importantly, resources of a country are for all citizens. Now, when we look at the democratic argument basically argues that resources are for all, and thereby they should be mandatorily given to all. And if the resources are for everyone, why should the resources not be given to everyone? To ensure that we give the resources adequately, appropriately to everyone, we should focus on equitable distribution. That is why, now looking at the larger argument and the picture, the states do more capital expenditure precisely because of this reason. That number one, strengthening the democratic argument, they are closely in touch with the people. They are closely associated in fulfilling the aspirations of the people. And very importantly, the politicians at the state level have an obligation to fulfill, which they have announced in the electoral argument during the electoral process of election. And this is the reason why, number one, the states happen to spend more money than the center. The data for the financial year of 2021 very clearly argues in front of us that the capital expenditure done by the states was collectively 4.46 lakh crores, whereas done by the center was 4.12 lakh crores. But there is one point that you also need to remember. There is one area where the state does not do capital expenditure, but the center does. And it is the center that does that expenditure, but the benefit is reaped by the states. And that area is defense. Defense is a massive big area for a country like India, where the center has to do capital expenditure, while the center itself may not reap direct benefit, because after all, it is the sovereignty of the entire country, and sovereignty of the entire country that includes all the states, which is basically protected when the national security is strengthened through capital expenditure in defense. So just remember this one point, that while states in India do more capital expenditure than the center, but there is one area where the center does capital expenditure, that is the defense, where the benefit is indirectly reaped by the states and not by the center. However, capital expenditure is done by both. So quantum wise, the tilt is in favor of the states vis-a-vis that of the center. Number one. Number two, what is the concern? As we have now analyzed that the states happen to do more capital expenditure, then what is the issue? The issue is very simple, friends. The issue is that today the capital expenditure done by the states is not uniform. It's not uniform means it does not happen throughout the year. The capital expenditure done by the states is basically done in a discretionary manner. Let me explain. In the previous point, I told you one thing, that based on the democratic argument, the states have to do more capital expenditure. And if the states have to do more, if the states have to do more capital expenditure, then one thing is very important, that they do that expenditure to fulfill the political promises. If they do that expenditure to fulfill the political promises, one important thing is that when a government is elected and when that elected government comes to power, it is not under an obligation to immediately fulfill those promises. So, normally, what we observe in India is that while promises may be made by the politicians and the political parties at the state level, most of these promises are fulfilled only, number one, very close to the election period. That could be 1 year prior to the elections, and more importantly, just a few months before the model code of conduct comes into play. That is why you will observe, and you must have seen this, that in our country, most of the expenditure programs and most of the mega projects are announced by governments just few months before the elections, so that they are able to create that narrative, they are able to create that image in the minds of the people that, see, we have fulfilled our promise. So one problem in the capital expenditure is that it is not uniform. It is relatively linked to the election cycle, number one. Number two, otherwise also, it's not that all the capital expenditure will happen only after 4.5 years. Capital expenditure by the states will continue to happen over the 5 year period of their election also. But even in that 5 year period, even when it is not an election year, we also observe that most of the capital expenditure is done towards the end of the year. This means that capital expenditure, even when done throughout the year, is not uniform. One reason is, again in this regard, because when the accounts of the year are likely to be closed in the month of February March, just prior to February March, you will see a rush by most of the states to announce developmental initiatives in November December. Now, there is another argument here. One argument is that the reason why the states do not undertake capital expenditure on projects uniformly is because they are not very certain or sure about the revenue that they are going to receive. And only when certain amount of revenue falls into their laps, the states enter into the capital expenditure mode. So here one thing is very clear, friends. There is a fundamental problem. The fundamental problem here is that today the capital expenditure is not uniformly done. Firstly, it is not uniformly done so that we wait for the election to come. Secondly, even during the 5 year process, when an elected government is in the place, that elected government in the place itself does not do regular uniform capital expenditure throughout the year. Why it does not do that is because it is unsure of the revenue that it is likely to receive. So thereby, this is where an intervention has to be made. So what is the center's new approach to capital expenditure? So in that rare meeting that happened, which I talked about in the beginning today, in that rare meeting, what happened here was that, friends, the finance minister of the country, that is the union finance minister, came out with a new strategy which was driven with the motive of undertaking a behavioral change in the approach of the states. So the idea was that the government, the union finance minister or the government of India proposed that, fine, because there is a finance commission, that finance commission very clearly tells us that certain amount of money will be collected by the center and it has to be shared between the center and the states. but that center has to share that money with the states over a period of time. As we have seen that because the states are mostly uncertain and unknown about the amount of revenue that they are likely to receive. So what has the center done? They have come out with a strategy which is called front loading strategy. Front loading strategy means that in order to ensure that the states are able to carry out capital expenditure on a regular basis throughout the year, the idea is that the center will now make that funding available to the states outrightly, so that instead of the states sitting and just contemplating that how much amount of money are they going to receive, the states will get a front load amount directly, which will enable them to undertake capital expenditure. Secondly, the larger objective of the center here is to ensure that with the capital expenditure, they want to give targets. So they want to make it a quarterly approach. So what happens is that now the center has said that 15% of the budgetary capex, if it is achieved in the first quarter, then the front loaded amount that the revenue was that had to be accrued to the state will be immediately given by the center. If the state is able to achieve 45% of the budgetary capex in the second quarter, then again it will get the second installment, and similarly 70% and 100%. So friends, the idea is very clear. Political party at the state level is in touch with the people. They will basically convince the people that vote us to power, we will do these things for you. When they come to power, they have to achieve those promises. They reserve the mega promises towards the end, just before they are going to go into the next cycle of election. But the other medium and minor promises they have to fulfill throughout the year. To fulfill those promises throughout the year, they will have to make budgetary allocations, and they have to ensure that they have to achieve those medium and minor and the smaller ones, the projects which they have announced throughout the year. Problem is that they are unable to do that because they are unsure of the revenue. So what happens now is that because they will announce certain programs and wait for revenue to come and then implement those programs in the budgeted year, instead of doing that, the idea is that whatever budgetary announcement you have done, achieve it in a targeted manner, take the money from the center, do this project so that capital expenditure is done on a regular basis, so that there is no rush towards the end. That is the idea here. Then, what are the challenges to this approach? The first challenge is that the federal structure challenge. Some states have their grievance. The grievance is that they argue that today center is trying to dictate to us by these targets that they have announced that how should we utilize our money. However, they say that this is a challenge and a threat to the federalism because the constitution in any way does not prescribe or does not argue that how should the states utilize their money. In fact, the constitution also does not tell that center has the power to guide the state or tell the state that how they should utilize their money. So some of the states are arguing that this is a threat to the federal structure because we have the right to use the devolution money our way. Center cannot give us targets and tell us how to do it. But let's understand one thing. While the states may be right in their argument, let us look at the intent of the center. Is the intent of the center behind this approach to weaken the cooperative federalism or to weaken the federal structure? No. The intent is very different, friends. The intent of the center is to motivate the states that rather than waiting for the revenue to come and then do the capital expenditure, do it round the year. Because when you do it round the year, the benefit is spread around the year. There is more uniformity. Intent of the center is very different. So we have to be very careful that in this specific case, the policy intention is to motivate, convince the states, and such an approach, do not forget friends, after all is going to benefit the states more than the center. After all, if the states are able to do capital expenditure on a regular basis, the states are the ones who are going to gain. The states are the ones who are going to gain the maximum out of it. So the intention is not to basically weaken, but if you look at it very carefully, the intention of the center is to actually strengthen cooperative federalism. In fact, when you are writing an answer in the mains on cooperative federalism, you can give this example: the center's new approach to capex, which is a policy where the center has more of an intention to convince the states, ensure that the states carry out a capital expenditure on a regular basis, so that this regularity benefits the states, so that this regularity eventually benefits the people. And overall, larger social and economic impacts are something that we have already seen. So please understand the impact and the intention here. But then the question is, what uncertainties are pending? The first uncertainty is the scissor effect in the economy. The scissor effect is that the falling revenues and rising expenditures. See, there is a problem today. While the center may convince the states with a good intention that you take the money from us, you also at the same time use that money, do capital expenditure, everything appears to be good, friends. But you know, the problem is, nobody knows how the pandemic is going to still unfold. We are in the middle of Omicron today. We are in the middle of a third wave of the pandemic in our country. There are European countries that have witnessed 5 waves and 6 waves. We do not know how the virus will mutate further. We do not know what shape is the virus going to take further. We also do not know that if the virus mutates further and there are more lockdowns, then the revenues will fall again and expenditures of the governments will rise. Because if the expenditures rise and the revenues fall, the states today will witness more uncertainty. So states today are very uncertain that how the supply chain disruptions are going to affect their revenue structure in the future. Also, there has been a lot of debate, and the government is trying to motivate the states by telling them that, see, there is a increase in the GST collections. Since March last year, we have been constantly witnessing a rise in the GST collections by the center. But the larger question worth investigating is the GST rising because of a genuine improvement in the recovery of the economy? Or is it only rising because of a pent up demand? Is it rising only because people are stuck at home and they are undertaking expenditure of those commodities that will enable them to work from home? For example, there has been a sudden rise in the sale of laptops in India, sudden rise in the sale of smartphones in India. Both of these items attract GST. Both of these items have contributed to rise in the GST. So one thing is very clear, that whether this rise in the GST collection has happened because of a genuine economic recovery or whether it is only because of a pent up demand is something that the economists need to dissect and investigate more. So one thing is very clear, center has a good intention. Objective of the center behind the new capex policy is also very good. But let's not forget that the states are a little cautious today to undertake more level of capital expenditure specifically when the pandemic is going on. Thereby, what is the bottom line? The center is spending more on capex now. That is going to happen. The states do not want any additional borrowings because sometimes the states also believe that if they keep on achieving their capex expenditure goals and if they are able to undertake creation of more and more assets, they might get tempted to borrow more money from the center. This money from the center may not be genuinely the money that the center may owe to the state, but it may be a form of a borrowing. And the states believe that if they enter into that stage today, specifically at a time when the pandemic is still going on, then they might end up in borrowing more money from the center over and above the money that was genuinely due to them through the taxation part. And that money may end up in contributing to more debt to the state. So somehow, the states are a little reluctant. It is in this backdrop. What can the states do in the meanwhile? They should follow what the RBI has said. boost own revenues through digitization, boost own revenues through reforms in the urban local bodies, and carry out structural reforms for items which are mentioned in the state list, so that these items in the state list can help you generate more money. At the end of the day, considering that the pandemic has induced digitization, considering that the pandemic has brought about a digitization at the core of government citizen interface, the states must take this opportunity and must use more and more digitization to connect. And this digitization that the states will do will help them gather more resources, garner more revenue, because when the human element of interaction will cut down and when the technology will take over, efficiencies will generally follow. Reforms in the urban local bodies and structural reforms for items in the state list will also help the states basically boost their overall revenue. So, one thing is very clear: what is the final way ahead here, friends? The overall approach is no doubt a welcome move to strengthen the fiscal cooperative federalism as we have analyzed, because the intent of the center's policy thereby has to be seen in a positive way. Center should not really lose heart right now that why the states are not showing enthusiasm, because as we have seen, the states are not showing enthusiasm for two reasons. One, they do not know how the pandemic will unfold. Two, by doing more capital expenditure, the states believe they might end up in borrowing more money from the center, which would be over and above the money that they actually are to be getting under the finance commission, and thereby that additional borrowing will become a debt for the states. So thereby the states are a little reluctant here. And the center should not lose heart, because once the economic recovery happens and once the pandemic subsides, the behavior of the states will change. Capital expenditure will improve. What is the road ahead? Center and the states should continue to have these kind of meetings ahead. The center should keep on pushing the idea, keep on convincing the idea, because the intention is very right. In fact, till the time the pandemic goes on, the center and the states through the meetings can do a very important thing. They can actually identify certain areas where they can improvise the quality of capex expenditure. They can actually identify and do a mapping activity where the center can work with each individual state and explore the comparative advantage of that state, whether it may be the geopolitical location of the state or whether it may be the resource availability of a state, through which the capital expenditure, if done, can enable the state earn more revenues, so that there can be a multiplier effect on the overall state economy. So till the time the pandemic goes on, the idea is, friends, that center and the state should continue to have meetings. Through these meetings, they should continue to identify those areas, and through those areas where states can actually work with the center and help the center and each other together, be it the railways, roadways, power plants, ports, and airports. A collective list and a mapping exercise will go a long way in strengthening the spirit of fiscal cooperative federalism. The idea is, let's work together to ensure that there is adequate job recovery, there is growth, and India is able to actually propel its global power ambitions. So I hope that this issue, as discussed in detail, is very clear to you, and I hope you have made notes even in your workbook with respect to this topic. Thank you very much.